You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome back, Brandon. I've got a question. Are you a Stranger Things man?
I'm not. Are you?
I am.
Right.
So you haven't seen any of them?
I watched I watched half of the first season. I'm not a huge TV person, so
okay, that's fair.
The TV show's got to really, really grip me. I really don't watch lots of seasons of different shows. I mean, I'm a Star Wars fan, but I think before that, maybe the last TV show I watched in its entirety was probably Breaking Bad.
Right. Okay.
But I've heard a lot of people get very excited about Stranger Things.
Yeah, I promise I'm not doing this because I'm invested in Netflix. But the
Netflix shareholder, you.
So go and subscribe
Disgusting.
to Netflix. No, the latest season is insane though. It's I think they spent like $260 million on this season, which is kind of mind blowing. They spent more than Disney spent on The Mandalorian, and it is actually insane. So I just had to mention it. Have you seen Obi-Wan?
Yeah, I have. I've been watching it.
Are you liking it so far?
Yeah, mixed opinions. I don't know. So a lot of this Star Wars TV show stuff, there are moments that just seem a little bit cheesy. But overall, it's I'm guessing you haven't seen it.
I have. Yeah, I have.
Oh, you have. Oh, yeah.
Yeah.
What did you think of I don't want to spoil it for anyone.
Don't spoil anything.
In episode 1, there's a child character that does a race through the forest.
How ridiculous was that scene?
How stupid was that? That was this little girl's running at a pace that a 9-year-old girl can run at.
Yeah.
And there's 5 fully grown adults sprinting, and she's somehow evading. There's one shot where the adult guy that's running after her just full on runs into a tree. It's man.
And before the chase even starts, there's 4 of them surrounding her. In a circle. How does she even get out of this? I agree.
It's one of those classic oh, whoops, I've missed.
Yeah, there's quite a few moments like that throughout the whole series where I kind of find myself a little bit yelling at the screen, being this is stupid. They didn't have to do it this way. But it is great.
But then certain intimidating characters come in, and I'm just here we go. Mixed review. But no, back on Stranger Things, I've heard that that this season is a lot more mature than the last season. Yeah, almost to a horror kind of extent.
Yeah, they've done very much what Harry Potter did, where you watch the first couple of Harry Potters and it's
anything from the trolley, dear.
Yeah, it's a kid's movie basically. By the time you get to the end, it's quite mature,
quite dark.
Probably, I'd probably say it's a similar level of I guess horror elements and
thriller kind of.
It's probably more gory than Harry Potter got towards the end, I would say.
Right. Okay. Yeah.
So it is. And it's great, which is. I mean, they have to do that because the audience that grew up with the first couple of seasons of Stranger Things are a lot older now, so it kind of makes sense that they would do that. But yeah, I was quite blown away by the latest season. So
I'd be interested to hear people that are following. Go over to YouTube and let us know the last TV show, or maybe you're watching it at the moment, the last TV show that you properly got hooked on. I'm interested to see what are the most addictive kind of TV shows that people have gotten hooked on. I reckon Breaking Bad will feature a bit. That was quite Game of Thrones, of course, that'll feature.
Yeah,
I'll be interested to see.
Yeah,
anyway.
all of those kind of HBO does good shows. AMC, amazing shows always. So anyway, we should move on to discuss some things investing and finance related. Today we've got a couple of stories. We've got an interesting one out of Apple, who released or they did a bit of a conference to talk about some of the software changes, and there's some businesses on the stock market. They won't be too happy about some of the features they've introduced.
Oh, okay.
We've got some updates out of some central banks in Australia and in Europe. What else have we got? Musk is back in the news with some more ongoing stuff about the economy and some rule changes in relation to stock trading. So
yes,
lots to talk about. We'll try and get to some questions as well towards the end from you guys. But before we get started, let's do the sponsored segment. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can download your trades using Excel, for example, and copy them in. And once you do that, it will track all of the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. I've said this a few times, but currency gains is pretty important at the moment with inflation at the moment and central banks changing their interest rates, because changes to interest rates impact the strength of different currencies relative to each other. So tracking those in your portfolio is going to be critical to getting an accurate view of what your portfolio return has been. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio and use the tax time to work out things such as capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. Use that link, sign up to a free plan, track up to 10 holdings for as long as you want. Or you can also use that link to sign up to a premium plan for more features, and you'll get 4 months off a yearly subscription if you use that link. So go check it out if you're interested. Particularly, Sharesight works all around the world, but particularly if you're in Australia and New Zealand and tax time is upon you, and maybe elsewhere.
Time.
I'm not sure if, and does anywhere else around the world do tax?
Oh, I don't know.
I'm not sure, but maybe
I have no idea.
So yeah, go check out Sharesight and get your investing finances in order.
Indeed. Let's talk about WWDC.
Yeah.
Hey, I got a tricky one for you. What does WWDC stand for?
Yeah, that is a tricky one. I didn't know what it stood for.
You looked it up?
I mean, of course I looked it up. I mean, if we're going to talk about it, I had to look it up. It stands for Worldwide Developers Conference.
Yes, but just for Apple.
Just for Apple.
Worldwide Developers Conference.
Yeah. I mean, it's exactly what it sounds like. It's kind of a big event, big spectacle that Apple puts on over a couple of days to show off their new software and tech for all of their operating systems. So Mac OS, iPad, Watch, and TV. And the purpose is kind of for third-party software developers who are making applications and can kind of see what changes are coming to
Right. Okay. I didn't know that
OS.
was the reason behind it.
Yeah, I didn't either, and it makes perfect sense. I always just thought it was them announcing it for consumers, but I mean, I guess it kind of does both. It kind of teases consumers about what's coming. You can get excited about what's maybe being released over the next year or worked over on the next couple of years. But yeah, for developers, it's kind of what features are going to be implemented that we can start working on for certain apps. So like widgets, for example, if you make a certain application, maybe then you can work on building a widget that works within iPhones when they released widgets or something like that, whatever it is. But
actually, one thing I'm just sharking in here. One thing that blew my mind. Have you seen how many views on YouTube WWDC 2022 has?
No, I haven't.
It's one piece of evidence, but you talk about a company with a brand moat. It's been viewed 7.4 million times in 2 days.
Yeah, that's crazy.
And it's a conference about software change. Like, my gosh. But I guess
crazy.
it was a little bit hardware as well, wasn't it?
Was there? Yeah, there was a little bit of hardware. Yeah, they spoke about the chips. Yeah, the M2 chip. I didn't watch. I'll admit I didn't watch the entire thing, so I'm not exactly sure what kind of other hardware stuff they spoke about. But I was
as a little anecdote, it's like company with a brand. How many corporate presentations could they put on the internet that would get 7.4 million views in 2 days? I mean, Apple, they know what they're doing, don't they?
Yeah, it definitely draws a lot of attention, and I wonder if a lot of the attention for the whole presentation comes from people like MKBHD, who obviously did a breakdown on the event, and I think I don't know actually if they have an in-person element, but he did a number of videos, and it looked like he was traveling in a hotel room, so I think he did kind of go to some physical events there to record some stuff. I wonder how much of that I'm sure that has a massive impact on the attention around the whole event and get people excited about maybe just watching and seeing what stuff is coming down the pipe for Apple. But there's a couple of things that I thought were interesting. One that kind of is very much related to businesses, particularly some fast growing stock market businesses. There were several new features that were introduced or updates that are coming to the iPhone Wallet app. So just to give kind of a summary of what the Wallet app is before these changes were announced. So essentially it allows you to securely store your credit card and debit cards and then a bunch of other things. So like loyalty cards, boarding passes, tickets, car keys, which is pretty cool, transit cars, and even IDs in a couple of states. They admitted that it's been quite difficult to get US states to be on board with ID on having ID on your phone, and it's been difficult with cars to get some kind of connection there where you can unlock your car with the wallet. But their goal is essentially to make a physical wallet
make it just digital,
obsolete. I
found that really interesting because I'm totally just used to these, Apple Pay or Google Pay or whatever it is, just being like, use your phone as your credit card. Yeah. That's pretty much all I use it for. And I was actually really surprised. I didn't know that they went that step further these days, because I remember when we went to the Formula One, when I bought the tickets to the Formula One through, I think it was the Ticketmaster app, you had to send those tickets to your Google Pay, your Google Wallet, whatever it's called. So the same app that I'm using to tap at the supermarket to buy my groceries, I'm also showing them this is my ticket to get into the Formula One. So that was like, wow, okay, this is actually starting to become a much bigger thing. And you can totally see it totally makes sense that, I know people that have an everyday wallet and then like a chunky wallet that's got all their cards. They have like 50 cards, like no kidding, in this other wallet, just because they're cards that they need to keep, but they don't need every day. So it just makes sense. It's just a small thing, but it makes total sense. Bring those cards, bring everything in your wallet onto your phone.
Yeah. I'm definitely someone who has both of those wallets, because the only thing I really need besides my ID, so I need a physical ID, then the only other thing I carry with me in like a really small wallet is a little bit of cash and like a credit card in case my phone dies, I guess. So I have like a physical credit card. But I've everything else I just put rewards cards, which I like to have on me, like flybys and that sort of thing. But you don't want to be carrying like 50 million cards with you everywhere you go. So
loyalty cards, gift cards.
Yeah. So that's kind of what the Wallet app is, and essentially you can use these stored, and most people kind of know this, but just to give a background, you can use these stored cards to transact via Apple Pay. So you can use your iPhone to wirelessly pay at physical stores. You can check out on websites if they've integrated it, and do in-app purchases, of course, on iPhones and Apple Watches. And then the only other thing that kind of existed around this space was the Apple Card, which is in the US only, which is a titanium Apple credit card issued by Goldman Sachs and runs on the MasterCard network. And it gives 2% daily cash back and 3% cash back on Apple products with no fees, except for interest, of course. So
right.
That's one thing I would love for them to bring to Australia. That card is sick. Have you seen that?
It is
medal?
Pretty cool.
Yeah.
Although
cool.
I don't know if they've changed it. I remember just watching MKBHD when he did his unboxing of the Apple credit card or debit card or whatever it was. But it was white. And white, maybe they've changed it. They probably have changed it. Have they? I don't know.
The one I saw on their website was like a silver.
Silver.
Yeah.
Okay, that's better. But it's like when with these a white credit card looks beautiful when you pull it out of the packet and it's clean.
Yeah.
Once it's been used a couple thousand times and it's been in and out your wallet, in and out, and it's just not looking white anymore.
Yeah, it's just
it
murky.
Looks trash. Yeah. It looks terrible.
No, but the metal, the silver medal or black medal, I think there's an American Express black card or something.
I'd get a black one. Black would be good.
Yeah, that's pretty cool. I wish there was. I mean, you can get an American Express, but you have to. It's quite a high spending limit, I think, for the metal one. But those metal cards are pretty cool. I wish they. I wish they had them in Australia. But in terms of announcements for this year, so they made a couple of announcements. in relation to the wallet. So merchants will now be able to do contactless payments to an iPhone without any point of sale terminal needed. So, most merchants need some kind of point of sale terminal where you can tap your card. Newer, cafes and maybe even stalls that are set up in a market will use something like a Square device, which is a very, very simple kind of thing. Or Square, I think, even has one where it plugs into the iPhone. So all of the interface is on your phone, and then you just plug in a little tap to pay terminal. That is completely obsolete now. So merchants can now just, if they have an iPhone, accept payments and use their phone as the terminal, which I think makes so much sense. I mean, the tech is there for it to send data out of the phone. It makes sense that it can receive data as well. So that makes perfect sense. That doesn't surprise me at all.
That is interesting.
Yeah. And look, it's not going to be for every type of business because, you can't obviously swipe a card into into an iPhone, or you can't insert a card into an iPhone. But for stalls and that sort of thing, they can just take contactless payments. And a lot of festivals and music events do that now, where they only take contactless payments. So it's kind of the direction it's going, and I think that's probably something. I guess I don't know how that will work in somewhere in the US at least now, because as far as I'm aware, contactless payments aren't as widely used as they are here in Australia. Here, pretty much everyone uses contactless payments.
I mean, I had heard that. I definitely heard that. But then when we were in the States, I didn't, the only bit of cash I held was Tom's cash that he took out. Everywhere else I used my card.
That's true. Yeah, we had no issue using contactless payments in the US. I guess I didn't really take any notice of what other people were doing, whether they were swiping or whether they were using contactless payments. But
cash is definitely on the way out. I mean, it's obvious.
Yeah, I can't remember the last time I used cash to pay for anything.
Yeah.
I just keep cash in an emergency, just to have something.
I've stopped doing that as well. It's great.
Yeah, it's probably kind of pointless to do that anyway. Yeah. But anyway, the big announcement in terms of the wallet was they announced Apple Pay Later, which is it's a great name, isn't it?
Apple Pay Later.
Apple Pay Later, which is, of course, their buy now, pay later service.
Wow.
That name is so good.
Apple Pay Later.
That's one thing Apple's so good at. They're so good at just having simple but really powerful names for their stuff, like Apple Watch. I don't know.
Another thing they're good at is creating new products or services a couple of years late, but somehow stealing all the market share. So this will be very interesting because there's no doubt there's a million different buy now, pay later products or services out there.
Yeah,
but let's just watch Apple come in and eat their lunch.
Yeah, it's massive. So their service is pretty similar to other services. 4 installments over 6 weeks, no interest or fees. I think there's going to be a limit of $1,000, which is what a lot of services do. Anyway.
Yeah.
So that most
just
people,
the masters of copying.
Yeah, exactly. And essentially, it will be available anywhere that Apple Pay is available, which is massive because it means two things. One is there's no integration needed for developers if they've already integrated Apple Pay into their online store. So if in checkout they've already got Apple Pay as a way you can pay, they don't need to integrate buy now, Apple Pay later. The customer will just be using Apple Pay and it'll be all done on Apple's end. And the other thing is, in terms of physical retailing, Apple Pay is accepted pretty much everywhere because it runs on the MasterCard network. So in terms of physical retailing, almost immediately, it's accepted more places than Afterpay and ZipPay and Affirm and all these other ones who have to basically convince merchants to accept this payment method. Apple immediately
just by their pre-existing structure.
Yeah. So...
Nice.
It's a pretty big deal. Some buy now, pay later stocks were down kind of 4 to 5% on the news. Affirm was kind of the biggest one down. Afterpay, which is no longer listed, but I think they're owned by Dropbox now. PayPal was down, which has a feature as well. But even the largest kind of I was kind of looking into this market. The largest buy now, pay later businesses, services, which is Afterpay and Affirm, they have just 10 to 13 million active customers, which is a lot of customers. But Apple has 1 billion iPhone users. So even if a small percentage of those users if 1% of iPhone users use their feature over Afterpay, they will immediately be the same size as Afterpay, which is kind of crazy.
Afterpay's owned by Square, by the way. You said
Square.
Dropbox.
My bad. Yeah, that makes
Box, Square, same diff. Yeah.
Oh yeah, because Square's called Cube now, right, or something, or like
Block or something.
Block. Yeah. My bad.
Yeah. Yeah, that's all right. It's just you just got your words mixed up. That's all.
Yeah.
I could tell straight away. Yeah.
So yeah, it'll be very interesting to see how successful this is. I saw one study that said that I think 7% of the US population have used a buy now pay later service in the last year. So I mean, if you assume 7% of their iPhone users that applies across the iPhone users, that's like 70 million active customers, which is like many times bigger than these other services. So even if they don't get to that, they're likely to be immediately a very large player, if not the biggest player in this space.
Honestly, I don't think that's good news for other buy now pay later.
No,
I don't think it's good news at all. I do think that Apple will just come in and eat their lunch, honestly.
Yeah, it is kind of another networking effect situation where Apple is able to bring so many users to this immediately, and so many merchants already accept it. It just makes it immediately a better service it makes it easier for merchants. They don't have to add anything new, and it's easy for customers because it'll be accepted pretty much everywhere. And then once that flywheel has started, then merchants that don't offer it will, and customers that don't use it will.
Yeah, you're exactly right. It's totally network effect. Like Apple have got this switching moat. They've got this ecosystem. They've got all these users. Now their job is to just think, how can we utilize this massive network and continually, take over other areas of business? How can we enter other areas of business? We've got all these, iPhone sales, great. Everybody loves, they're all hooked on iCloud and music and all this. Now what do we do? Oh, okay. We've got our Apple Pay. Now everybody's using Apple Pay. Could we push it one step further and get into buy now, pay later? I mean, everybody's already using it. Yeah, we can do that. Okay, great. Can we do this? Can we do that? Yeah. It's just about applying your network effect to another area. And then it's like, because they're so massive, it's just immediately like they just suck it up. It's like, this is ours now.
Yeah, it's kind of rough. And I mean, it's difficult, I think, for these businesses to differentiate themselves in any key way. I mean, it's a pretty basic service. There's not really anything besides being no fees, which Apple immediately did, of course. There's really nothing else you can do to differentiate. So I think it's going to be difficult going forward for some of these other companies. Obviously, for people who are not iPhone users, they can't use Apple Pay later. So, that's a market that still exists. But I think in the US, like 80% of people use iPhones or something. So in the US, at least, it's kind of checkmate. But yeah.
Pretty insane.
We'll see what happens with that. The only other thing I had on Apple, I know I've spoken about this for a little while, but Apple Carplay, they showed the next generation of Apple Carplay. So Apple Carplay is kind of where you connect your iPhone in the vehicle, and if the vehicle has it integrated, then basically a little iPhone screen will pop up, and you can use all of the apps that are relevant or whatever. Have you seen this on MKBHD's video?
I don't think so, no.
Well, they're working with car companies to take over the entire UI, the whole user interface. So for cars that have really good in-car digital displays, they'll be able to take over everything. So like the speedometer, the fuel economy, maps, clock, hands-free, the whole, they showed an example of a car. I guess it would probably be like a newer electric car, for example, where like the whole front is just a display, including the speedo and all of that. And the whole thing just, once you plug in your phone, converts to Apple CarPlay, and you can have like your like calendar up and music, and It looked great. It looked amazing. Go have a look at this this video.
I'll have to,
everybody, because it looks very impressive and it makes perfect sense. And as he says in the video, car companies for so long have been terrible at making in-car entertainment systems. So it makes perfect sense that someone like Apple can come along and just do the entire thing.
Wow, I'm looking at it right now. That's insane.
Yeah, it's kind of impressive. So
they're basically just going like, look, auto manufacturers, you guys are not good at software, so just leave it to us. We'll do it.
Yeah, and I presume the car probably has to have some other kind of system if you don't have an iPhone. I don't know. They didn't really explain if it's still going to be the classic, you plug in your iPhone and then it goes to Apple CarPlay, or whether the whole thing will be Apple CarPlay and you can use it better with your iPhone, but you can use it obviously if you don't have an iPhone. There has to be some entertainment system obviously if you don't have an iPhone, but I don't know how that will kind of work. I guess it might be manufacturer to manufacturer, since they would have to kind of design it specifically for certain vehicles. So, but that'll be fascinating to see, because that's something that cars have had. It's been a letdown for cars for a very long time. Is the kind of the digital screens are always terrible, and the maps,
the software
and
sucks.
the GPS is terrible, and
there's no besides Tesla's car software. There's no car software that's good. Yeah, it's just all garbage.
Yeah, it's terrible.
Yeah, very bad.
Yeah,
and like the screens are like super laggy. It's just everything about it. It's just a bad experience.
Yeah.
Anyway, hot take over here.
Yeah. So that's all I had to talk about. I thought those were a couple of interesting areas, but
yeah, I need to get on. I need to get on the catch up. I need to watch through after this. But yeah, that sounds crazy. All right, where should we? Can I talk about this? These rule changes, potential SEC rule changes coming to stock trading.
What's happening?
Well, it could be good. I'll tell you. It says the top US securities regulator on Wednesday proposed rule changes to transform how Wall Street handles retail stock trades after the meme stock mania last year raised questions about whether mum and pop investors, hey, that's not very nice, mum and pop investors like me and you, Hamish Hodder, we're getting the best price. The plan unveiled by the U.S. Securities and Exchange Commission, the U.S. Securities and Exchange Commission Chair, Gary Gensler, would require trading firms to directly compete to execute trades from retail investors to boost competition. The Wall Street watchdog plans to scrutinize the controversial payment for order flow, or PFOF, practice, in which some brokers like TD Ameritrade, Robinhood Markets, and E-Trade are paid by wholesale market makers for orders. So what they want to do, I'll just go through, this article explains it well. So this is how it's going to work. Okay, so the proposed rule changes will include an SEC definition of best execution. The proposed rule changes will include an SEC definition of best execution requirements that would force retail brokers to send their customers' orders to auctions run by exchanges or off-exchange trading venues, which would allow market participants to compete to trade against the order to compete to trade against the orders, the resources said. My gosh, I can't read anything today, Hamish. What's going on? Currently, retail brokerages can send customer orders directly to a wholesale broker to be executed, as long as the broker is matching or bettering the best price available on the US exchanges. That's the best, what's it called? Best bid and offer.
Right. Okay.
Yeah. I don't know. Yeah. Large market makers typically improve on the best price by a fraction of a percent, so they get the business, and there we go. Right. Last paragraph. The rules would require retail brokers to send PFOF orders, payment for order flow customer orders, to the wholesaler offering the best deal on this auction system, rather than just the one that pays it the most for the orders. So at the moment, it's like a Citadel goes over to Robinhood and just says, hey, man, we're going to give you X million of dollars if you send us those juicy customer orders, and then we'll figure out a way to fulfill them internally, which makes it profitable for us. But what the SEC is now saying in this, sorry, it's a very long, convoluted kind of article, but what they're saying is that, hang on, we don't really like this whole, it seems a little bit dodgy. It's just like, we'll approach Robinhood and say, hey, just send us all those orders and we'll give you X millions of dollars. You want to do that? Oh, handshake, let's do it. Instead, what they want to do is set up an auction system where Robinhood can say, okay, we've got all of this, we've got all these orders. We don't actually execute the trades ourselves. So they will say, hey, these trades, someone come and execute them, we'll give them to you. And these wholesale brokers have to bid against each other. They have to compete against each other to offer the best deal for the retail investor that wants to either buy or sell a security.
Yeah, okay.
Yeah. Does that make sense?
Yeah.
Sorry.
I mean, look, all of this technical behind the scenes stuff is not anything I kind of really understand, to be completely honest. But it sounds good. It sounds like it's going to be fairer for retail investors.
Yeah.
And I would imagine it's probably something in a very small margin, a very small impact on your overall outcome as a retail investor. But certainly, we want to kind of close any ability of brokers to take advantage of retail investors. So
I think overall, if you just looked at how you did as a retail investor, I think it would make the smallest of like the smallest, maybe a cent, or I don't even know, the smallest difference. However, maybe on a very large scale, it makes a difference. And it also it's just a different structure that seems to just stamp out the possibility of dodginess. You know, of saying like, no, trust it. Like, please give us your orders. Like, we want those orders. Give it to us. It's like, no. We're gonna, instead of just Robinhood and Citadel making a deal, instead Robinhood has to, throw it out there. All of the Citadels of the world have to come through and make an offer, and then Robinhood has to give it to the one offering the best deal for the retail investor. It seems like.
Wow.
It says this would fundamentally alter the business model of wholesalers, which can make more money by executing retail investor orders internally than they do on public exchanges, where they might find themselves trading with other sophisticated trading firms or institutional investors. Quote, I asked staff to take a holistic cross-market view of how we could update our rules and drive greater efficiencies in our equity markets, particularly for retail investors, Gensler told an industry audience on Wednesday. Other benefits I've just listed. The new SEC rules would mandate market makers disclose more data around the fees these firms earn and the timing of trades for the benefit of investors. It would enhance order-by-order competition. That's what we're talking about, including via potential open and transparent auctions aimed at providing investors better prices. They would require broker-dealers and market centers to disclose more data around order execution quality to benefit investors, including a monthly summary of price movement and other statistics. The rules would also seek to shrink the minimum pricing increment, or so-called tick size, to better align with off-exchange activity and harmonize the tick size to ensure all trading occurs in the minimum increment. So I think, what's the minimum increment at the moment? It's like 5 cents or something.
I'm not sure. Yeah,
I think it's 5 cents in Australia. Maybe it's different in the States. Yeah, I'm not quite sure.
I don't know. Yeah, it's certainly not something I think I spend.
No, I think this is like on the limit of our technical knowledge.
Because I mean, the truth is, for the average investor, I mean, having these rules in place and checks and balances is obviously important. It's great that they're doing these things, but for the average investor, it's not like this is something that you need to be overly worried about, I don't think. I mean, certainly if you're just index fund investing, you don't have to worry about it. If you're investing in great businesses, it's not something that's kind of, you don't have to be thinking, oh, damn, how much of a return have I lost to this, to this system. But
I think it's just cleaning up the structure so that there's less of an opportunity for people to
exploit
be
it.
Dodgy.
Yeah.
Or for entities to be dodgy.
Yeah,
just making it more transparent, open, everyone can see what's going on. So we'll see if it happens.
Yeah.
I read another article like from the Wall Street Journal. I haven't got it up at the moment, but it was just like, the title was just like, brokers quick to criticize latest SEC. I was like, of course they're going to criticize. And it was just like line after line of different like spokespeople from different brokers saying, look, we think this new ruling is worrisome. We don't think it achieves the best for retailer, blah, blah, blah.
Okay.
Like, no one. Of course you're saying that.
Yeah, it is interesting how kind of all of this unfolded, because it just started off as Robinhood. It's the free trading platform. Don't worry, like, it's completely free. we don't make any money. We're doing this for charity. No, but like,
and for those that don't know, like the whole shtick behind like brokerage-free trading platforms, the reason that they're able to be brokerage-free in a lot of cases, not all cases, in a lot of cases, is because they instead make their money through this payment for order flow. So they grab all those customer orders and they're just like, hey, who wants to execute them? Pay us and we'll give you these orders. You can see what's coming down the pike. So that's like the reason behind it. But yeah, sorry. Continue.
No, it is. It just kind of started out as this kind of amazing thing, and then it's like, oh, that's not quite as squeaky clean behind the scenes in some cases. It would be cool if there, and I'm sure maybe this does exist. I don't really spend too much time looking at brokerage-free sites, but it would be cool to have somewhere it was super clean, and the only way they made money was off some kind of premium subscription service. Maybe it's access to data, or a limited number of trades for the free trading, or then you pay a subscription service. I don't know, something like that where you on an individual trade basis, you're not paying, but they could tie it into some subscription service or something, I guess. I don't know.
Yeah.
But yeah, it's not something I think I trade like actual individual trades, definitely less than 10 a year. Like some years it'll be less than 5 a year.
Yeah.
So, besides like index fund kind of regular trades, like trades of individual businesses.
I would say even including that.
Yeah, it'd be
less.
close. Even including it would be pretty close. It'd be like less than 20. So yeah, I'm definitely not someone who cares all that much between $5 brokerage versus $0 brokerage.
Yeah,
it's not making a huge difference.
It's not gonna make a big difference. Yeah, exactly right. Okay, that's that one. We'll have to see. Yeah, I don't know. Who knows whether these rules will be implemented, but we'll see.
Yeah. All right. Let's talk about the Reserve Bank of Australia. Our favorite.
We just love the Reserve Bank. Interest rates going up in Australia too, eh?
We do. We spend a lot of time talking about the Federal Reserve. We give Jerome Powell a lot of media time, screen time.
We do. Actually, speaking of that, inflation data is coming out in a couple of days, isn't it? For
yes.
the States.
So it usually comes out on the, I want to say 11th or 12th or 13th.
Yeah,
I hope it doesn't come out on my birthday on the 11th because that'll be depressing. But
no, mate, it's going to be 2%.
Oh yeah, that's right. What are we? No, we're into deflation now. We must be. Yeah, it has to be. Otherwise, maybe there'll just be inflation up until November, and then December will be -30 or something like that. So then we just wipe it all out.
I wonder what would have to happen for that to come true. It'd probably be like
what effect would have to happen in the market?
No. Like what would actually have to happen in the world for that to actually come true? I don't even know.
Just over the shoreline, like 1,000 boats with oil just appears. Where did it come from?
It's just
oil is free.
Alien species has come through and they offer us a gift of all the resources we could ever need.
Yeah, someone invents a pill
10 times more than we would ever need of every resource we could think of.
Yeah.
They're like, we're just going to leave this here for you guys as a peace offering.
Someone invents a pill that you just eat once and it's $5 and you never have to eat again. Like your body that little pill just sits in your stomach. It just releases slowly over.
Oh, this is actually a funny little thought experiment. Yeah. Anyway, sorry, I've totally derailed your story here, Hamish. Sorry.
No, so maybe that'll happen, but assuming that doesn't happen, we can continue on with what's going on in the world. The Reserve Bank of Australia, our central bank, of course, finally raised the official cash rate, which is our federal funds rate equivalent. They raised it 0.5% to 0.85%. So still under 1%, but much bigger than the 0.15% increase that they did, I think, last month or 2 months ago. So they're in line with the US now in doing 0.5% increases. So that comes after our inflation rate, I think, hit 5.1%.
5 or something, yeah.
So we're still quite a bit off the UK, the EU, and the US, but we're still well above the 2 to 3% target, or the 1 to 2% that the US kind of looks for.
Yeah.
Shortly after, the banks came out and made a statement and said, "Hey, everyone's having a tough time at the moment, so we're not going to be passing on the full 0.5%. I'm just joking. They all passed it on within like a few hours.
I was like, Hamish, what you have just said does not sound like bank behaviour.
Are we in a parallel universe? Am I still dreaming? No.
Here at Ethical Bank,
Yeah.
we know that you're doing it tough.
Yeah. No, so Commonwealth, NAB, ANZ and Westpac, all four major banks in Australia, all raised their variable mortgage rates by 0.5%. So just to give some context, on a $500,000 mortgage, that's an extra $133 a month. On $1 million mortgage, that is an extra $265 a month. So, it's a sizable, increase. It's not, it's not anything that's small. The current forecast has the official cash rate hitting 2.5% by the end of this year. So there's still expected to be a number of rate hikes. If that's the case, a $500,000 loan will have an increase of $652 per month by the end of next year.
Wow.
Which is, that's big, right? And this is kind of what we've been talking about, how because interest rates have been so low, just a small increase can double the payments someone has to pay really, really quickly, or add 50% to it. And $650 monthly increase just on interest rates at 2.5% is
that's a lot.
That's a lot. And 2.5% is not necessarily where it will end. So
I think I heard the average Australian mortgage is $300,000 in that range.
It's probably something like that. Yeah,
I think I heard that on the news the other night. So yeah, even still, that's going to be quite a substantial jump.
Yeah, for sure. One RBA analyst said that even if interest rates rose to 2%, which he called, and this is a quote, a doomsday scenario, 40% of 2%, 40% of borrowers are already making payments large enough to cover the increase. So if interest rates go up 2%, he's basically saying at least a sizable chunk of borrowers are already paying the extra amount. They're paying down their mortgage quicker than they need to now. Which is good.
That's promising.
It's only 40% that are doing that, and that's only a 2% increase. It's not necessarily. I don't know if I would call that a doomsday scenario.
No.
I'd probably be modeling something more like 6 or 8% as a doomsday scenario. But and then the other kind of point is the article made was 25% of borrowers would be facing a 30% increase in their payments with just a 2% interest rate increase.
Right. Okay.
So a quarter would face, quite a substantial increase. So, yeah, that's kind of what's happening down under in relation to inflation, and the Federal Reserve starting to make some moves in line. And yeah, as you said, we'll see next week what happens with inflation, and then shortly thereafter we'll see what the Fed decides to do about it. So certainly I think it'll be not exciting. It'll be interesting to see what happens and whether inflation continues to decline on a year-over-year basis as it did last month in the US, or whether it rises. The ECB, so the European Central Bank, on the other hand, is in a little bit of a different situation. They still have high inflation, 8.1% last month, but they haven't even stopped the net asset buying yet. So they're still doing quantitative easing. They're still printing money. They've still got the machine going.
Really?
It's like they haven't looked over at what everyone else is doing. And to be fair, the US only stopped a couple months ago in March, and both have only done a couple of rate hikes. But yeah, the ECB is still just churning that machine away. So yeah, they haven't even.
It's getting hot in here. Getting hot in here. Well, what should we do?
What did you say inflation was? 0.8? 8? Yeah. Turn it off.
0.8. Fine.
But yeah, so that's kind of crazy. So they haven't started any interest rate increases, but a number of members are apparently in favor of a 0.5% increase next month. But in order to do that, they would have to cut their net asset spending first. So they've got a little bit of work to do.
Makes sense.
They're going to push that off button. Stop it.
Yeah.
No more. But they just need another 20 million.
Yeah,
no.
I give people $500 and they vote for me.
Yeah.
But yeah, there you go.
So there you go. That's what's going on.
So there you go. Hey,
that's what's happening in the world. Still yet to be seen.
Same story.
what interest rates will have to do. I don't know.
Well, we're going to be talking about the US inflation rate next week, I guess.
Talk about them next week. Yep. So
that'll be interesting. What are we at? 8.3? What did it go? 8.5? And then it came with the oil stuff and just dropped to 8.3.
Yes. But core inflation accelerated during last month. So it was just that there was deflation in energy. So
yes, that's right.
We'll see what happens. Look, I'm pretty sure if core inflation, it really it depends. You can look at it as you want to look at both, I think, because you don't want to obviously exclude energy. That's obviously important. And food and energy, two kind of important ones.
Yeah.
But yeah, depending if there's big swings, one might be a little bit more relevant than the other, but who knows?
Stay tuned next week. The Young Inflation podcast, the Young Investors podcast,
the Jerome Powell podcast.
The Jerome Powell. We should get him on as a special guest.
Yeah. Well, that we can get him on, I think, right?
Jerome.
Hey, Jerome.
JJ, mate.
So when are you going to, start doing something?
When are you going to do something? Hit him with a zinger. All right. Should we talk about? Who's this character you've put in today? Elon Musk. Who's that?
Elaine
Musk. Have you seen that picture of him as a girl?
Yeah. Oh yeah.
Elon Musk. That's so funny. What a meme. Actually, he's a good looking lady, Okay, no. I don't want to ramble on Elon Musk too. I feel like there's been an Elon Musk segment for every podcast for the last 10 weeks now.
Yeah.
But he came out this week and said Tesla are going to lay off 10% of their staff after he tweeted that he has a super bad feeling about the economy.
Wow.
Yeah, and at this when he posted that, it's like super bad feeling about the economy. I'm like, oh yeah, here we go. You've read some articles, but then I'm like, hang on. Elon Musk probably has a pretty good take on what the economy is doing.
Yeah.
From the businesses that he runs.
Oh,
and, he's got operations in China. He knows what's going on there. He's got operations in the US. It's a auto manufacturing company, Tesla. So he's got his finger on the pulse of commodity prices.
Yeah.
Aluminium, steel, etc.
And it's a luxury, at least some elements, and I guess all of their cars are quite expensive. So people are putting them on finance a lot of the time.
Yeah.
So that's kind of a leading indicator of how consumers are, because people choose to cut borrowing first for discretionary things. So that just perfectly lines up with borrowing to buy a car. So
he's probably got his finger on the pulse. He probably actually has a better insight to the economy that I probably give him credit for. And I think that was actually raised by a couple of JP Morgan analysts. It was like, actually, we do respect his opinion quite a lot because he probably has a lot of good insight in that area. But anyway, so Tesla are going to lay off about 10% of staff. They have 100,000 employees, so it's not insignificant.
Wow.
However, they said that salaried headcount will reduce by 10%, as it had become, quote, overstaffed in many areas, but not hourly headcount. They say that hourly headcount will increase. And in fact, he specified saying, note, this does not apply to anyone actually building cars, battery packs, or installing solar.
Right.
So it seems like more of the higher up, maybe management, sales, who knows, administrative, maybe those people might be the ones that are cut.
Right. Okay.
A message sent to executives on Thursday laid out his concerns and told them to, quote, pause all hiring worldwide. So there you go. Said that almost 100,000 people are employed at Tesla and its subsidiaries at the end of 2021. Its annual SEC filing showed. It did not break down the numbers of salaried and hourly workers.
Right, okay.
And what happened to the stock? Tanked 9%.
Yeah.
Ouch.
I think we're going to see a lot of this over the next year. Margins are starting to businesses are really feeling the margin pinch on higher costs in other areas and in labor specifically. And I think we're probably in a lot of areas, especially in discretionary purchases like the auto industry, definitely going to see, I think, revenues come off as the economy kind of deteriorates a little bit worse. And that means that people look to cut staff because unfortunately it's quite expensive. It's usually one of the most expensive elements of a business. Even in an auto business where they have it's very low margin, they can get a lot back from reducing their staff.
Yep.
So yeah,
there you go.
I think we're going to see a lot of this, but Tesla will be one of those ones that'll be cool to watch because I think it will act as somewhat of a leading indicator for the rest of the economy. You would expect. But then again, I mean, they have such a backlog of demand that maybe their actual revenue numbers won't act as such a good indication. Do they release the actual backlog figures, or is that they don't? Right. So that's where I think there would be some indication, because the revenue, of course, the revenue collected from customers is only recorded when the car is delivered. So they'll probably still continue to grow, I guess, on that backlog for some time, even if demand is lower. So
yeah, I think the only actual published backlog data is that they've got like over 1 million Cybertruck pre-orders.
Okay.
And Elon has said that they have at least 3 years of Cybertruck orders.
Wow.
At the moment. So
1 million, that's crazy.
It's a lot. But there's the opposing argument, to keep it balanced, is to put your name down for a Cybertruck, all you had to do was put down I think a refundable $100 deposit.
Oh, okay.
So how many of those orders will actually get cancelled? How many will eventuate? Who knows?
Okay. So it wasn't the same as the Roadster was like 10,000, right? Or $1,000.
Oh, it was more. It was like 50 grand.
Was it really?
Oh, the original Roadster? Or
for the new one.
I think it's like 50 grand.
Oh, okay. Well, there you go. Yeah. So that's a different story. Right?
Yeah, exactly. And I think even the Model 3 back in the day was $1,000.
Maybe that's what I was thinking of.
Yeah, the Model 3 was $1,000 and they got like, I think 180,000 orders in the first couple of days or something like that after that reveal event. So, yeah. But yeah, I mean, he's still very confident. He talks about this all the time, that they've got way too much business. Like the demand side of the equation is not the limiting factor for Tesla at the moment.
Yeah.
So yeah, we'll just see what happens. But yeah, obviously, if Musk is not someone who would seek to fire people. That's not really his character. He's not really about that. So for him to say, no, we do need to cut 10% of staff. The last time he cut staff, he said, he basically said it hurts him to do this now, but he's doing it now so that they don't have to cut staff again. And he said that. He says he doesn't want to do this again. Yeah. And so the fact that he has essentially had to do this now is probably a good sign that he's not seeing the rosiest of outcomes in the future, but we'll see.
Yeah, we will see. I always watch it from. Sorry, did I interrupt you there?
No. I was just going to go into Q&A, but yeah, finish what you're going to say, and then we'll go into it.
I always watch this kind of thing, not from the perspective of automakers, but from RV companies, because it's a very, very similar kind of position.
Yep.
Thor just reported the biggest RV manufacturer in the US just reported their earnings yesterday. And yeah, they've had the same story. They've had this huge backlog, which they're just trying to fulfill as quickly as they can. So their revenues have just been exploding. And finally, this quarter, I think, was the first quarter where backlog actually went down. So they're finally over the top of the backlog and getting it down, which is an indication of them increasing their capacity, of course, and their efficiency. But it's also probably an indication of slowing demand for RV products as they get more expensive to purchase because of higher cost of aluminium and steel, and then also higher cost of financing. Yeah. All right. We'll jump into some Q&A?
Yeah, let's do it. There's a couple that are addressed to you. Should I ask you this one here?
Okay, yeah.
This one says, "Hi, Brandon and Hamish. Love the podcast and your channels. Thank you very much. Hamish, I do valuations with your spreadsheet and Phil Towns' margin of safety. I recently did a valuation and the margin of safety buy price was 70% lower than your spreadsheet buy price. Usually the buy prices are in the same range. Would appreciate your thoughts on this result. Thanks."
Yeah, they are two completely different approaches. One using future price to earnings and one is a future cash flow calculation. So they can differ. But if there's a 70% difference, I think it's very likely that it's because the business you're looking at has multiple classes of shares, and Google Finance has trouble when it comes to multiple classes of shares. Because in my spreadsheet, I automatically take Google Finance's calculation of the total number of shares. If it's like Google where they have 3 classes, it only takes one class of shares. It doesn't add them all together.
Okay.
So you might need to manually take the buy price for the whole company or the fair value for the whole company and just go into the annual report, find the actual figure, and then divide it by the number of shares. And then you'll be able to get to that. And if there's a 70% difference, that's probably what's going on. So I would imagine you're probably looking at Google or Berkshire Hathaway or any of these businesses that have multiple classes of shares.
Right.
That would be what I'd look at first. But feel free my email's on my YouTube channel. Feel free to send me an email if you're still having trouble, and I can help you out there.
Cool.
All right, I'll read you this one.
Sure.
Hi, I'm 14 and from the Czech Republic, small country in Europe. I've been listening to your podcast.
We know the Czech Republic.
I've been listening to your podcast for a fair amount of time and I love it. Thank you. Anyways, I have a problem establishing at least some circle of competence. Do you have any tips on how to start and keep widening it? Also, thank you very much for entertaining us at the same time as teaching us a lot. Thanks. Well, thanks for tuning in. Appreciate it.
Yeah, thank you very much for tuning in. I have to say, if you're tuned into this stuff at 14, you're set. You're going to make a lot of money. So honestly, most people your age, most of your friends are probably playing video games. So if you're looking at getting into investing, nice.
Well done.
Well done. That's all I can say. You think about it. I mean, you've got, even since when did you start investing, Hamish? Like 2018? 18. I was probably like 20 something, 20 maybe.
Yeah.
Even if you've got 6 more years of compounding than I had when that's mega. It's not mega at the start, it's mega at the end. Imagine getting to 65 but actually having the results of compounding by the time you're 71.
Yeah.
That'd be sick.
Yeah.
That's a good deal. So
yeah.
you should take advantage of that.
Yeah, it could be the difference between a double in the size of your portfolio. Pretty
legitimately.
If you have an extra 10 years at the end at a 7% return, that's a double. So
wow.
An extra 7 or 6 years at a slightly better return is also a double. So it can make awesome. A big difference having an extra few years there.
But sorry, to your question, I think we've spoken about this one a bit before. A good place to start is not feeling pressured to look into things that other people are talking about. Just start to look into things that are very close to home. So, for example, maybe you are into video games. You might be like, oh, I play Xbox a lot, or I always play games made by Take-Two or by Bethesda. You might end up looking into Microsoft. You might end up looking into Take-Two, trying to think of other video game companies, Sony, PlayStation, Activision, Blizzard. Yep. Call of Duty, that kind of stuff. Or maybe you're just like, you know what? I feel like because I use social media, blah, 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 a lot more than, say, these analysts do. I know the ins and outs of like Snapchat or Facebook and Twitter and that. Maybe you start looking into social media companies, or maybe you're like, I really like to watch Disney Plus or I like to watch Netflix. You can start look, but I just say whatever you do, just keep it really close. Don't feel like, I'm young and I'm going to start in the world of stock market. Everybody on TV is talking about JP Morgan, so let's go JP Morgan. Let's start reading. I wouldn't do that at all.
I'm a biopharmacist now.
Yeah, exactly. And a lot of the time, investing doesn't need to be complicated. People like to make it complicated, which blows my mind. And Peter Lynch says that in his classic speech, where he's like, a lot of people want to buy the M.2 Zing Bang 44 flash memory, 84 megabit, blah, blah, blah. And he's like, if you buy a piece of junk like that, but yeah, just keep it simple and don't feel like you need to, this analyst said, pharmaceuticals, don't do that at all. Yeah.
Yeah, that's good. The only thing I would kind of add on top of that is as early as you can, just get into a good habit of just reading about businesses. So whether it's autobiographies from founders or just any books related to business, because your ability to read quickly and decode information and to retain information from reading is critical for learning how businesses work. So as getting on that as soon as possible, even if it's not that often when you're young, just finding a founder that you find interesting maybe and seeing if they have an autobiography or a biography where you can just kind of learn about how they built that business. I think just getting in that habit is like a good foundation for then going on and later reading hundreds of annual reports ultimately on companies and getting into the economics of how businesses work. So,
yep. Nice. All right, should we wrap things up?
Yeah, we've been going for an hour. Hope everyone enjoyed today's episode. As always, if you have more questions, feel free to head over to the YouTube version and you can leave your questions as comments down there. And every week we grab them and try and get through as many as possible. Thanks to Sharesight for sponsoring today's episode. Sharesight.com/young investors. If you want to get 4 months off a yearly subscription or try out their free plan. Thanks, Brandon, for joining me as always.
All good, friend.
And that's it for this week. Hope everyone has a great weekend. I certainly will try and have a good weekend for my birthday.
Long weekend, isn't it?
It is a long weekend. Oof. So, everyone enjoy it. Take a break. And
see you down the coast.
We'll see you next
That's where
week.
all the Canberrans go. They all go down the coast.
Yeah, right.
Where do people in Melbourne go?
I don't know. I don't know where people go.
Melbourne's probably cool enough that they don't need to run away from Melbourne.
Yeah, like down the peninsula, I guess some people would go to Mornington or to, I don't know, something down there. But yeah.
It's probably not like a big vibe of leaving Melbourne for a long weekend. Whereas with Canberra, it's just like, well, we're off to the coast. See you guys.
Yeah, I don't think my family ever used to do that. So I'm not sure. Right. I'm kind of out of that world. So
anyway, if you're from Canberra, I'll see you at the coast.
See you later, guys.
Goodbye.